place I've ever been.
Hello guys, welcome back to another lovely trading video. This one's going to be a Sunday watch list, and what I'll be looking at more on the large cap side of things coming into this week. So firstly, these are all the earnings coming up this week, or at least the bigger names. Nothing really I'm not too excited for. Chegg could be alright, PayPal, GM, Etsy, maybe Uber, Skills, Pfizer, Corsair. But there's not like Roku, AMC, Peloton, but yeah, and maybe Neo. But apart from that, there's nothing like I'm too excited for on here, and I probably won't be trading much of the earnings this week. However, going on to other stocks, I've got three main ones I'm going to be watching in the large cap side of things. The first one being Netflix. Right now, we are consolidating in this kind of area here. Since we've gapped down on earnings, we are consolidating on both the 4 hour and on the daily on the first deviation. So I would be more bullish on this. I think we will push up, and that's more what I'm waiting for. Not trading while there's no direction, but once we get a direction, I will be looking to actually sell some cash secure puts on this, because I'll be trading most of these using options. And once we can see Netflix close above this 521 level, that's when I would start being a bit more bullish on it, and I would feel comfortable selling some cash secure puts around 495, not holding them for long, maybe a year at expiry, but look to lock in profits just after a week or so, when hopefully we can hit other profit targets such as 543, 558 and 570. So that's how I'll be looking to trade that. But even if I do that, it will be one contract, nothing too crazy on that. GME, GameStop, this one is looking quite good. I think we will get some movement on it coming into this week. So whether you're kind of looking at the daily or the 4 hour, we're kind of getting a pennant forming right now. We're making higher lows, but we're making lower highs. So again, we don't really know. It is a more bullish pennant, so more maybe likelihood that we do break out. But again, no direction has been formed yet, so I won't be touching it until a direction is picked, whether that ends up breaking down to the downside or breaking up more bullish. And I'll be trading GME if it does break up only. If it breaks down, I won't be touching it. If it breaks up, I'll be looking to trade it how I always do, and selling cash secure puts, not cash secure puts, poor man covered calls on it, and just look to make the premium. Hopefully we get a nice spike up, implied volatility goes high, I sell contract premiums while they're high, and then whether the stock stays flat or falls down, I can just sell them at a profit and get rid of them. Again, use long-term expiries, maybe 3 to 6 months out, just to give it time to pop, consolidate, kind of like it did here, consolidate, and even on both of these runs, kind of consolidated around this area for about a week, and just basically allow for that. So I'd be looking for a price target of around 261, and then I'd probably be selling around 300 strikes cash secure poor man cover calls, and obviously that's more of a bearish play, so I would be expecting it to fall down. But even if it consolidated around this area, time decay on something with implied volatility as high as GameStop, if it did do another pump, would allow for some good profits. And again, I probably wouldn't hold them to expiry. If we pushed up all the way to around 260 and then fell back down to this 200, 180, 200 slash like $100, around like the $100 to $200 area, that's where I'd be looking just to lock in the contracts. I'd probably do it with maybe 2-3 contracts, and I'd probably just be locking in the profits coming around this area. So the last big name large cap stock I'll be looking at this week is Tesla. Again, we're kind of getting another pennant forming. We have been quite bearish on this stock recently. It's really struggling. Earnings have kind of helped it, and so I am looking for a breakout again. I'm not going to be touching it until a trend or a direction is chosen, but if it trades to the upside, once we can get a close outside of these my personal trend lines, I will be looking to do some cash secure puts around the $600 strike. Again, only one contract or so, because if I do ever have to, if I do end up getting having to buy the stock, I don't want to have tons of capital in one trade, so I'll probably just be leaving that to one contract. And again, it'll be something a bit like Netflix, because the stock is quite expensive. I would lock in profits relatively quick. And again, if it falls to the downside, I personally probably won't be trading it. I mean, Elon Musk is too powerful. I do not want to be bearish on the stock, because you just never know with Tesla. So I personally won't be trading it to the downside, but if it did break below this 619 level, again, I would be kind of more bullish on it, and be looking maybe to even just get some shares if it goes that low. And yeah, have a stop loss around 590, so it'd be, a relatively, like a $50 area, or depending if I get on at 600, just kind of depends, but around like a $30 per share risk. And I'd be probably looking for a 2 or 3 to 1 risk ratio. Again, I would probably have small size, maybe literally 10, 20 contracts, nothing crazy, because the distance we're looking for it to move would be relatively large. So they're the main ones I'm watching for this week. Again, there may be some earning stocks that pique my interest if they do, beat expectations by a lot, or in either direction, whether that's to the downside or upside, and then it may provide some opportunities. So let's say if Chegg or PayPal come out, report relatively bad earnings, or just get hit hard after earnings, they could be plays where I would be looking to sell some cash secure puts, or just buying up some contracts. So that's it for the watch list. So if that's all you want to see, that's it. I'm going to quickly update you on my current swing positions if you're interested in that as well. Because you will see I barely have any now. I've got 3 positions. I think last time I did one of these, I had maybe like 8. Most of all of them actually, I think I got out of with profit. Maybe apart from one. I think I did a MARA swing that lost like $180, nothing too big. But all the other swings are profitable. So right now we're in a Credit Suisse swing. Again, it's the same position. We went, I think it was around this 1060 area. We sold some cash secure puts right around this hit area. So even though prices, even like in this area here, we were actually up on our position, just because implied volatility decreased quite a bit during this time. So right now I'm just holding these contracts. I mean, even I think this is my break-even area around like $9, $9.20. So even if it was to close down here, my expiries aren't for about a year, and I probably won't end up holding that long. Once we see Credit Suisse pull up to around this $11 mark, it's probably where I should be looking to close out the remainder of my contracts, because I have only now got a few contracts left. I got rid of the majority of my position, I think, last week. Discovery is the next one. Again, this one got hit on the same kind of news. Credit Suisse got hit on the news because obviously they had investments in the hedge fund, and Discovery was just one of the hedge fund stocks it had in a large capacity. So when they had to do their fire sale, it crashed quite a lot. No fundamental changes, but down around 50%. So around this area here, I sold some cash secure puts at the $30 strike, and you can see right now I think we're down like $200-300 on this position. Nothing too crazy. It's gone down, around $5 from where we originally sold the contract. So implied volatility is going down. That's why we're not getting hit too bad, even though the price is decreasing. But I'll just be waiting for this to break to the upside. I mean, right here you can see on the daily chart we're currently like hugging this support deviation. So I think we're kind of testing it again. Hopefully we can break through. Once we break through and we get back to around my original entry, the position will be up by a few $100, and I'll probably be looking to close out half of the position. But again, these have about a year out expiry. I think they expire in January, so got quite a lot of time. Lastly, I got a Twitter position. Obviously it got hit relatively hard in earnings. It dropped around, you can see 15%. So I traded this by doing, again, cash secure puts at the $50 strike. So I think there's 6 months expiry. So if Tesla is below $50 in 6 months to come, I will have to buy the stock at $50. But again, we're kind of hugging the support here. We've just broken through the support on this side. But again, I don't really see us staying below, around or below the 50 for too long. I think we'll at least reverse up to around $70, $60-70. And once we come into like the $60 zone, I'll start to cover some of my contracts and just get out of the position and reduce risk. But right now I think we've only got like 2 or 3 contracts, so again, not too much risk in it anyway. So that's it for both the watch list and my current swing positions. Hope you enjoyed. I'll do another watch list most likely next Sunday and update you on my swing positions. So I hope to catch you in Monday's day trading recap, and that's it. Don't forget to like, subscribe and comment. Peace.